And aside from the better-than-expected headline report, there was plenty of disappointment in the February employment report, specifically wages. We saw February's average hourly earnings up just 1/10, so slightly lower than expected, certainly suggesting that that January rise was an anomaly. And if we look at this on an annual basis, that means wages are still back down to that 2% growth rate, which we've been seeing for the past several years. So it's interesting why the market is reading this as a beat. From the Fed's perspective, top-line job creation still remains insufficient to absorb the slack from the labor market and translate into wage pressures.
I think it is, but there's always going to be a dislocation when the event happens. We saw it with QE2. We expected at some point it would end, and when it did, when news came out, the market still reacted. So you always have these people at the margin, and I am not that concerned because, again, the things we look at, we said, one of the things you see before rate hikes is you increase volatility. The groups that you see before rate hikes are acting as they should. So I think it's been in the market, but you're always going to have, at the event itself, you're going to have a dislocation.
There have been some rumors that we can expect to see other products. One of the more persistent rumors has been around a new Mac or possibly MacBook Air. It's been about a year since the Macs were refreshed. And while, of course, the Macs it's not as big or as an important of a business for Apple as, say, the iPhone, it is still an area in which Apple has very much focused. Late last year, research firm IDC said that for the third quarter, Apple actually had one of its best PC quarters ever, and it's now the third best seller of PCs, still behind HP, of course, but it has about 13% market share when it comes to PCs. And so the Mac is still a very important business and important product for Apple.
So I think it's almost like Apple is providing more credibility for Dow than the Dow giving credibility to some company that's getting added to it. Look, Apple is a stock to own, right? Our price target's $150. The stock will go up and down on events. The phones are going to generate earnings. This will provide some incremental growth. It is a 15 to 20% grower, trading at a very low valuation multiple. Absolutely own the stock.